Hi, and welcome to the Stockscores Market Minutes for February 6th, 2012. This week's topic, Finding Alpha. Before I get to that, a reminder that you can subscribe to my free weekly newsletter by going to the address you see on screen. That's stockscores.com/newsletters.asp. All right, let's get into the idea of what alpha is. The market is getting back to normal right now. We are moving away from this situation where stocks are all correlated to one another, and we're now seeing individual stocks are able to move on their own story. And this is what we mean when we say alpha. It's that part of a stock's performance that relates to its individual business and prospects and that sort of thing. Now, to find alpha, what we need to do is look for abnormal price and volume activity, things that really make that stock stand out from the crowd. So I've put up a stock here that I caught on to today. This is Dendrion, DNDN, on the NASDAQ Stock Exchange. And you can see at the blue arrows, there have been days in the last month when this stock not only traded with abnormal price action, but also abnormal volume. This tells us that this stock is trading on its own story rather than the overall market correlation. Now, in order to find alpha, what I do is use the Stockscores.com market scan tool, because in that tool we have filters that look specifically for abnormal price and volume activity. Now, this is a screen capture of what the market scan tool looks like, and here you can see that we have an abnormal activity filter which looks for abnormal price gain or abnormal price loss, as well as an abnormal volume filter which you can use throughout the day to look for stocks that are on pace to trade abnormal volume that day. So I really recommend you take a look at that sort of thing in this kind of a market, because now we can find those individual stocks that can do well. All right, let's get on to the market analysis. Starting off with a chart of the euro, I have here a one-year chart, and you can see over the last 3 weeks the euro has bounced back well in anticipation that Greek debt problems would somehow be resolved. Now, the market's kind of getting tired of waiting, and in some ways we see that the impatience is causing the euro to slowly drift lower, but really not break down. Now, this is an important chart to watch, because if it continues that upward trend, that's going to be supportive for all assets, I would say. But if we get a solid break through that green line, then you want to be defensive. Now, we've broken through intraday that green line, but we keep coming back to close strong on the euro, and that is a sign that the market is still hopeful that there will be some resolution in Greece. The fear index has been drifting lower for a number of months, is very near support now. I think this one's almost done its downward trend. The fear index, if you will, is pretty much back to not having any fear at all. And so we should expect that this downward trend should end soon. And some say that this downward trend is a little bit overblown to the downside, that people are getting a little bit complacent about the problems that still exist in the world, and that's something to keep in mind. The S&P 500 has had a great rally since December 20th. It is now coming into resistance, and there is a good chance it will get stuck here. It wouldn't surprise me at all to see some profit taking. Even if there is good news out of Greece, you sometimes have to wonder if the market has not been anticipating that over the last 5 weeks, and they will sell on the news, having bought on the rumor of a deal in Greece. TSX is a similar chart, but certainly not as strong as the S&P 500, but it too is bumping up against resistance. And until we get a solid break through that red line, I'm going to say that we're probably going to grind our way sideways. Something to keep in mind is that February is normally a negative month for the stock market, and we may see some profit taking in stocks in general in the next few weeks, although I'm still confident that the long-term bull market is in its early stages. Gold remains in a long-term upward trend. I've drawn here a 5-year weekly chart. We've had a pretty good run over the last few weeks. I think that there's a sentiment here that we may see some profit taking in gold in the very short term, but that long-term upward trend line, which I've drawn in red, remains in place, and therefore the long-term outlook for gold remains positive. Oil has been stuck in a trading range for the last few years, and it really is in a narrow range right now. I don't think that this market is going anywhere unless there is some major political event like something going wrong in Iran or perhaps Nigeria. You don't need to be too worried about gold breaking out, but it's got good support as well. It seems to be a price that's heavily regulated by the major oil producers. So my outlook then is neutral on everything this week. Longer term, I still remain optimistic on stocks and gold. I'm pretty much neutral on oil. But with stocks coming into resistance, they are really due for some short-term profit taking. And I'd suggest a little bit of caution here. There's no sell signal yet, but we should be watching those indexes closely. Well, that has been the Stockscores Market Minutes for February 6, 2012. Have a great week in the market and trade well.